Okay, hello and good morning, everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 30th of December 2019. So welcome everyone. Welcome to these few last trading days of 2019, and of course at the same time welcome to the upcoming first trading days of 2020, and all that is happening this week. So yep, should be an exciting week for everyone, despite the markets being closed on the 1st of January, and an early close on the 31st of December. So yep, like I said, despite all that, it should be quite an interesting, exciting week. So we do have a bit of information coming out, a few economic indicators from across the world, and the main focus, of course, will fall on the manufacturing PMI figures from major economies. And of course we do get the FOMC meeting minutes in the beginning of the year. So yep, guys, quite an interesting one, quite an interesting week ahead of us. So let's see what it has planned for us. But before we jump into the charts, quick mentioning of our JFD YouTube, well, actually not the channel, that's going to come after. But the first of all, of course, the risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Now then, as I've mentioned before we jump into the charts, quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we update on a daily basis. So I believe you can find a lot of useful stuff here for yourselves, guys. So yep, feel free to visit us here on jfdbank.com and click on the research tab right here. But right now, let's jump into the charts. Now, the first one I want to touch on here is the German DAX. Now, last week, German DAX didn't have a lot of trading days. Similarly, will be this week, of course, but this time together with the rest. So basically, DAX will be, and let me just confirm that to you guys, DAX will be closed on well, actually tomorrow. So basically it's getting an extra day, so a full day. So unlike the other indices like the FTSE, who will be which will be closed early, but still will be trading a little bit. But like I said, DAX will be closed tomorrow. But looking at the picture right now and looking at this technical picture on the 4-hour chart, we can see that even with some trading that we saw last week, it still struggled to push above this, or should I say push even closer towards this 13,425, 426 territory here, which is in a way currently the highest point of December. Now, looking at the cash index, we can see that the price is slightly below the 13,300 zone, and in a way, this will be quite interesting to see if DAX is going to be able to push higher today. But to be honest, looking at the overall picture, even in the markets, in the commodities and the FX, there is an increased risk kind of, or I wouldn't say that it's a risk off environment right now, but there is some yen buying, and of course some safe haven commodities are feeling better. So in a way, this is kind of what it's worrying us a little bit in terms of the upside on this index. So that's why what we're going to do here is we're going to take a very cautious and conservative approach and wait for a push above the 13,426 level first before we will examine higher areas. Until then, we may see a bit of a correction here to the downside. This is what we're going to be leaning more towards too. And don't get me wrong, still overall we are still trading above this upside support line taken from the lowest point of August. So this nice medium term, a bit of a tentative one, but nevertheless an upside support line. So we'll keep an eye on that one. There are some good potential areas of support here, and together, of course, if the index decides to travel lower here, then it could in a way also test maybe the 200 EMA here on the 4-hour chart, or the psychological 13,000 level. Or in the end of the day, it may end up testing this upside support line. But again, for now, let's not over speculate on this one too much. The way we could play this one out is, of course, we'll keep an eye on some key support levels. So this is going to be a short-term idea. And in a way, if we see a drop below the 13,249.50 zone, then, well, in a way, this also could place the price below its 50 EMA and open the path towards these key areas of support like the 13,140 or the 13,105 areas, roughly around here, guys. But of course, if these fail, then to withhold, then yep, further declines could be possible. And the decline, I mean, initially this decline will be seen as a temporary correction because we're still going to be above this upside support line. That is, of course, if the index decides to travel below the 13,250 zone. So for now, we will remain neutral, but keep an eye on this level. And as I said, with the upside, we need to see a push above the 13,426 level here first before examining higher levels, because this would confirm a forthcoming higher high, and we could start targeting slightly higher levels. Gold. Now, as I've mentioned just right now, basically with gold, we did have a fantastic rally here to the upside last week. The commodity managed to test the area near the 1516 level. I talked about this one in one of my previous videos and last week. So now what we're looking here for is maybe for a potential little correction, but again, the correction could be just short-lived. The momentum is quite strong still, but let's see if it can actually continue pushing further north. For now, we're going to be very careful here. In a way, what we would like to see maybe is a bit of correction, but don't get me wrong, it is quite strong right now and it's quite one-way traffic, and we are in this kind of interesting period right now where the market doesn't really trade normally and according to technical analysis, so it tends to just have one-way traffics most of the time. So that's why, guys, be very careful with this one. So in a way, this could travel a little bit higher, maybe test the 1517, 1518 zone here a little bit higher, and then maybe retrace back down. So something like this could be possible, because don't get me wrong, we are quite extended here to the upside, but still that's quite okay for the bulls here. In a way, it could, even if it drifts a little bit lower here, the commodity still, if it hangs around above the psychological 1500 level, then still the bulls could see this as a good opportunity to jump in and push the commodity higher. Now, with the downside, well, we'll take a very careful approach here. And in last week, I was talking about this 1487 zone. So, but given that the precious metal has moved already a little bit more to the right, so to the up and to the right again, so northeast here. Now we might actually lift our potential breakout point a little bit higher here and keep it somewhere around here, so near the 1494 level. So in a way, let's say by the time this decides to travel lower here, in a way it could end up being somewhere around here, and then this level here could be ideal for a potential breakout. So that's why we're gonna lift our downside scenario, the level here. The breakout point will lift it a little bit for the downside scenario, and that's going to be around the 1494. And then we'll be very careful because we will be testing the 200 EMA after that on the 4-hour chart here. But if that fails, then yes, further declines could be possible. But until then, it seems that the downside could be slightly off the table unless it's a small little correction here before. So keep your eyes on that one. Bitcoin Cash. Now, I talked about this one on Friday, and this is what I mentioned here, guys. So what we needed here was a nice potential breakout. So we were still hanging around in this triangle pattern on Friday. But what I was saying, that not only did we need to see a breakthrough one of the sides here, but also one of the highlighted areas like the 194 zone here on the upside or the 182.70 on the downside. Now we did get a nice pop here through the upper side, and the crypto managed to travel all the way to our target here near the 213 zone, roughly around here, and he actually even managed to overbreak it a little bit. So in a way, what we can do here is we're going to redraw a few lines here, and in a way, given that the crypto found resistance here, and that's actually also near the high of the 8th of December, near the 215 mark. So that's going to be our new barrier to watch, and if we do get a break above this, this would conform a forthcoming higher high, and our next little stop could be around here near the let me just quickly put this one back on the chart, near the 227 zone, which is the high of the 29th of November. So we'll keep a close eye on that one, but if it continues to travel higher, further north, then yes, we will aim for the 232 mark, and then towards we'll aim for the 248 zone. We'll go step by step on this. We're not going to drag this one drastically to the upside, but slowly we'll go step by step, because don't get me wrong, at some point we may get a bit of a correction here, and this is the situation where even if we might get this correction even earlier. So don't get me wrong. So these higher levels, we will consider those only if we get a break above this this recent high here near the 215.70 zone here. If we do get a push above this, then yes, we will aim for these higher levels. But if it continues to hold, there is a possibility for a bit of a correction here back down, and maybe even now we could consider this this lower side of the triangle, the previous formation here. We can consider that as a nice upside support line. So we'll remove this line here, and now we'll focus on this upside support line taken from the low of the 18th of December. So, and in a way, we could see maybe this one drifting back down, testing this line, and then pushing back to the upside and breaking the 215.77. So that's why, guys, be very careful here. Yes, it could travel further north, but wait for a nice push above the 215.70 zone. And then if we do get a break above that, then be very careful. Go slowly, step by step to the upside, because don't get me wrong, as I said, at some point we may see another recorrection before another leg of buying. So that's why keep your eyes on this one. In terms of the downside, let's say, well, ideally probably somewhere around here that we'd be looking at, and probably somewhere around this area that we would need to see a break off of which could in a way open the path towards slightly lower areas again. So, but again, for now it seems that the downside could be slightly off the table, so let's keep an eye on the upside. AUDJPY now. Now you can see that the pair managed to break this level right here nicely. So last week that was the 76 mark, roughly around there. That's what the pair broke and traveled higher. It continued to trade above this upside support line here, taken from the low of the 10th of December. So it's a bit of a tentative one, but nevertheless, still kind of is playing out nicely. So what we're going to do here is we're going to keep an eye on this upside line, and we're also going to keep an eye on the same level here, the 76 mark, roughly around here, because this is going to be the potential breakout point for the downside. Now, don't get me wrong, we'll keep it short and simple first. We're not going to drag this one all the way here to the lower. Initially, what we're going to aim for If we do get a drop below this upside line and a drop below the 76 mark, then we'll aim for the 75.454 level or the 200 EMA on the 4-hour chart here. So slightly below that, we do have the 74.83 level, which is also a fantastic barrier, a fantastic area of support. But again, for now, guys, like I said, the downside will be slightly off the table as long as we remain above this upside support line. In a way, we are expecting maybe a bit of a correction here, a further correction lower. Yep, and if this upside line holds, then we could get the bulls kind of entering back into the game and pushing this one to the upside. The only thing is that if you're more on the cautious side, you will probably wait for a push above the 76.55 zone, which is the high of last week, and only then target the upside, because this way the pair would confirm a forthcoming higher high and will be on the more on the safe side, and we'll try to avoid this tricky situation right here. So that's why, guys, for now, keep this idea in mind. Continue observing the price action here, and of course it will be quite interesting to see if the indices start moving lower. Then we could see AUDJPY moving lower, as well as the yen buying would increase. So yep, guys, keep your eyes on that one. GBPNZD. So quick mentioning of this one. I talked about this pair last week, and basically what I was saying that we need to see a clear move through one of the highlighted areas. So for now we remain neutral, although we did have a nice move lower here previously. So since around mid-December, the pair was drifting lower, and then it broke this downside line here, but kind of is still failing to push above its 21 EMA on the 4-hour chart, and also is struggling to push above this key barrier as well. So it did have a small overshoot, but as you can see, even the 4-hour candle was not able to close above it. So we're still looking at the same level. We're still waiting for a nice push above this barrier, the 1.9568 zone, roughly around there. In a way, you could round it up towards the 70, so in the 1.9570, a nice pop above this could in a way open the path towards higher levels. The only thing is that what's kind of worrying us in terms of the upside here, because we did have a nice drift lower, and this little kind of consolidation right now, maybe it's actually a little pause before a further decline. So don't get me, because as you know, we're still kind of having the Brexit worries, so it's going to be an interesting month, I would say, in regards to Brexit. So keep your eyes on those. Of course, we do have some UK data coming out, but to be honest, will be probably the data might go as the secondary kind of trigger for the pound. The main trigger could be the Brexit headlines. So yep, keep your eyes on those. And looking at this picture technically here, if this decides to travel lower, we will only consider the downside if we see a drop below the 1.94 12 zone, roughly around here, which is currently the lowest point of December, and only then target the downside. But even then, we'll be very careful. We'll aim for the 1.9312, which is the lowest point of October, and after that, we'll see what he wants to do. And because this is a very strong area of support, so if he wants to drift further south, we'll reevaluate this again. But again, for now we'll only target this little territory, and then we'll take it from there. But only if we see a drop below the 1.9412. USDJPY. So this is where the yen buying is kind of being noticed. Of course, don't get me wrong, the US dollar is on the weaker side as well. But the technical picture here, I've talked about this one last week in my videos, and basically what I was saying that despite, although we are still trading above this upside support line taken from the low of the 1st of November, still we recently the pair was caught in a little range here, roughly between the 109.17 and the 109.73. Now, what I was saying that we need to see a clear move out of this little range before we could examine a further directional move. Now, the pair did move lower, and you can see that it did drop below the 109.17, but it's currently getting a hold up near the 200 EMA on the 4-hour chart. So if we do get another drop below the 200 EMA here on the 4-hour chart, then this is where it could become a little bit more exciting for the sellers, and we could see this one drifting a little bit lower towards this upside support line, and this is where we will we'll reevaluate this again. We'll try to see if it actually wants to rebound. If it doesn't, then there's another potential area of support here near the 108.40, and in a way, to be honest, we would really probably would like to see a move towards this level here, and maybe the rate stalling around here as well, because this way the pair would confirm a nice little range here, so which is roughly between these well, actually a bigger range, so between the 109.73 and the 108.40, so something to keep in mind. But again, for now, with the downside, we need to be very careful here, guys. Yes, it is showing signs of a willingness to kind of move further down, but just keep an eye on this 200 EMA. If it continues, if it drops below this, then yes, we will aim for the upside support line initially, and then maybe the 108.40. But if it continues to struggle to push below this 200 EMA, then well, we may see maybe a bit of a reversal here back to the upside. So, but of course, we're not gonna start looking at higher levels until we get a nice break above the 109.73 level, because that's going to be our safe game here, because all this territory still would be somewhat of a neutral one for us. And finally, Euro USD. So pushing nicely to the upside. So you're pushing above the 1.12 zone, testing the 1.12 zone, but the big question here is, can it drift further south? So you can see the steep up move that we had here on Friday, but to be honest, what we're going to do here is probably we're going to aim for something like this, where we may see a bit of a correction here. If it gets a hold up near the 1.1183, this is where the bulls could re-enter the game and push this one higher. So for now, yes, it is looking quite interesting, but don't get me wrong, it is quite overstretched here on the shorter time frame, and maybe a bit of and it already reached the R1, so maybe a bit of a small correction could do here before another leg of buying. So that's why, guys, be very careful with this one. We will consider some lower areas if we see a drop below the 1.1144, and this is where we will lift our potential kind of breakout point to the downside a little bit higher. So this one, 1.1144 could be a nice area to keep an eye on, because at the same time, if we see a drop below this level, we would see a drop below the 21 EMA. We may reevaluate this barrier at a later stage, depending on how this is going to trade, but for now, at this point in time, this is the level for the downside, because like I said, at the same time, it would place the rate below the 21 EMA, and we could consider some a slight move lower here back to the 1.1110 or even below that. So for now, guys, be very careful on this one. Yes, it is pushing higher nicely. We don't forget that we are at the end of the year, so surprises might happen, and we might get one-way traffic, so be very careful with those, guys, and especially if you like to counter trade. So like I said, be very careful with those, and have your stop losses in place, and just try to not to ruin the end of your year, guys. So okay, I really hope you found it useful. Thank you very much for sticking around and watching it till the end. If you want to join me later on at my traders tea time, as always, that's 14:15 GMT time. For now, guys, I hope you have a beautiful trading day if you're trading, and yep, I'll see you later on at my traders tea time, 14:15 GMT. Thank you very much, and bye bye.